We're searching for the best yield protocol out there. And if you haven't seen my last video, which is going to be up here, by the way, so you can check it out, we are in real yield season, which is made by protocols that are indeed making revenue. They are generating fees, they are generating income for their protocol, and they have a revenue sharing model. Just like a company that pays dividends for stockholders, we now have these real yield protocols who reward users, who reward stakers by giving part of the revenue to the stakers of these protocols. Now, last episode we already showed how to find these protocols, and today we're going to be comparing two of the probably the most talked about protocols right now in DeFi that fit this real yield criteria, which you already saw by the title, is Gmx and Gains Network. Now, they are both DEXs, they're both trading platforms in DeFi, so you don't need KYC, you don't need to submit any form, you don't need to have a login, you just need to connect your wallet to their protocol. So they're very popular amongst traders, but we're not here to talk about the trading side of it. We're not here to talk about the perpetual side, the trading side, but about the real yield part. How can you, investor, profit from the profit of the protocol itself, which is what we're going to be discussing today. Which one is better, Gmx or Gains Network? Well, we're going to be comparing both of them. We're going to be looking at analytics, statistics from both Gmx and Gains Network to see which one is the best one, to be honest. And depending on what kind of investor you are, which one should you invest into? Well, of course, I will be telling you which one I prefer, but then I'll explain why I prefer one over another and which one should you choose. So without further ado, let's jump right into it. We're going to start with Gmx. Gmx is on Arbitrum and now on Avalanche. And what we are going to be focusing on is not on the platform, how you can trade these tokens, but how you can make passive income by being a stockholder of their token, which is called GLP. Of course, they also have the GMX token, but the GLP is the one that we have to focus on because it is the one that is providing the real yield that we are looking for. So we have to understand Gmx. Gmx has grown a lot in popularity since it launched, just because it has a ton of liquidity and it is a very good protocol with low fees and a fast protocol. Both the Arbitrum and Avalanche ecosystem, they are very, very fast. So that also helped a lot Gmx itself. But how does that liquidity work? Where is that liquidity coming from for all these tokens available for people to trade? So this is where the GLP token comes in. The GLP token is an index token, meaning just like the S&P 500 is an index with the 500 biggest companies in the United States, the GLP token is an index made by a couple of tokens itself that I'm going to show. Now we have GLP for the Arbitrum and for the Avalanche ecosystem. They are different. The index is different because, as I'm going to show you right now, the GLP index composition for Arbitrum is different from the Avalanche one. So for Arbitrum, we have Ethereum, Bitcoin, Chainlink, Uniswap, USDC, Tether, DAI, and Frax. Half of these are stablecoins, and this is the weight that they try to maintain for each and every asset inside this index. And you can see the current weight and the target weight that they want to have. For both Chainlink and Uniswap, they keep very low weight, so they don't want to be exposed too much to these two tokens. But for the rest, you can see Bitcoin, Ethereum, and USDC, they have the majority of the weight of this index itself. Now, if we switch right here to Avalanche, you can see that this changes. If you scroll down, it's going to be Bitcoin, Ethereum, Avalanche, and USDC. Of course, we have double Bitcoin and double USDC because there's the .E version available on AVAX. And the weight, of course, also very well balanced. We have Ethereum and USDC leading with 20 and 50%, and then the rest is with Bitcoin and Avalanche itself. So this GLP token is what provides liquidity to all of these assets right here. So the more GLP is minted and staked right here, the more liquidity it will be provided for these assets that are part of the index. So everyone that buys the GLP token is helping providing liquidity of the ecosystem. As we saw right here, there's a few tokens that are over the weight that they were assigned to. Whenever GOP is swapped for one of these tokens that are overweight, the user is going to pay a little bit more in fees, and that little bit of fees is going to be applied to these tokens that need to be rebalanced. This will make that balance happen and keep everything stabilized. So now that we've seen the GLP token, why should you buy and stake this token in the first place? Well, because this is where the real yield comes in, which if you go to the Earn tab again on gmx.io, which is currently paying you a 21% APR. So this is not compounded. This is simple interest, 21% on Arbitrum. Now, if we go to Avalanche, I think is over 24 or something. Yeah, 25%. Again, this is APR. So if you are staking on Arbitrum, you're going to get paid in ETH. You're not going to get paid in GLP. You're going to get paid in Ethereum. And if you are on Avalanche, you're going to get paid in Avalanche. You're going to get paid in wrapped AVAX and also in the escrow GMX token. And that GMX token, you can see right here, right on the side, you can stake that for an extra 21%. And again, you also get more AVAX from that. So then you might ask, where does the yield come from? Where is that yield, that 21% in Ethereum that I'm getting? Where does it come from? Well, this comes from all the fees. Whenever there's a trader who buys or swaps tokens in the GMX platform, they have to pay these little fees. And these fees are going to be accumulated, and then 70% is going to go to the GLP stakers. So you as a staker get 70% of the fees of the protocol itself. I already gave this example, but think like you are a stockholder and this stock pays dividends, which are part of the revenue that the company has made. So same thing right here. You, by being a holder of the GLP token, you qualify to receive part of the revenue of the protocol itself. So this is where the real yield comes from. You saw that we have two prices for GLP on Arbitrum and GLP on Avalanche. What moves the price of these tokens, the GLP on Arbitrum and the GLP on Avalanche? We have three major things that play a role right here in the price of GLP. The first one is the amount of GLP in circulation. The more GLP that we have in circulation, this brings the price down a little bit. Another thing is the price of the indexed assets. So we saw that we have Bitcoin, Ethereum, Avalanche, Uniswap, all these other tokens. These tokens, the volatility that they experience, they affect the price of GLP. So if Bitcoin and Ethereum, they dump 5-10%, that is going to reflect on the GLP token, because a big part of the GLP index token is made by Ethereum and Bitcoin itself. But you also have stablecoins on the other side to neutralize that fall if Bitcoin and Ethereum get a huge fall. And the major thing that reflects the price of GLP tokens is the P&L of traders. The more traders lose, the higher GLP token is, because if a trader gets liquidated, all that cash that they lost is going to be collected as revenue for the protocol because they got liquidated. Or even if they just lose time after time, all these trades that they're doing are generating fees for the protocol. So you, by holding the GLP token, you're basically like a casino. You're the house, and the house always wins. 95% of traders are not profitable, especially if they are short-term traders. If they are swing trading for the long run, like they are swing trading for weeks, let's say they hold a position on Ethereum for weeks or maybe even months, they most likely know more what they're doing instead of day traders. We have seen studies proving that trading is not profitable for 95+% of people. So by you being a holder of the GLP, staking the GLP token, you are already betting against traders and profiting from the fees that they generate by opening and closing trades. Now let's take a look at Gains Network. Gains Network, as we said, just like GMX, they offer trading, but in my opinion, they are a little bit above GMX just because they offer trading for stocks, crypto, and Forex. They offer a little bit more than what GMX does. Other than that, we are looking at another protocol that has this revenue sharing model. And how do they share their revenue with stakers? Well, they share that by using the GNS token. The GNS token is their governance token, but there is something that is different from the GNS token and the GLP token, which is that GNS is deflationary. Whenever traders lose money, there's some GNS that gets burned. So not only GNS is also like GLP, that like the casino, you're being the house. Whenever traders lose money or whenever traders trade in abundance, you make money from it. But GNS also gets burnt. And as we saw before, traders tend to have a negative P&L. We're going to be showing you the P&L for both GMX and GNS. And you can see that overall, they haven't been profitable in the long term. Of course, this is accumulative. There are people here who make money trading, but as I said, trading is not for everyone. So for GNS, let me show you right here, we actually have 3 different pools, and just the GNS pool is paying you a 7% APY, and it is getting paid to you in DAI. So you're getting paid in stablecoins. In the other one, you are getting paid either in AVAX or in Ethereum. This one is in DAI. But if you don't want to hold the GNS token, you can also hold DAI. You can also deposit DAI, and it's paying you a 10% yield on DAI. 10% yield on a stablecoin is very, very good, very legit. And then we have the liquidity pool, which is paid by GNS and DAI itself. For that, you are getting 24% APY. It is almost the same as GMX, the GLP token. With Arbitrum, you're getting paid 21% APR, which is the same that you're getting paid right here. Now, on Avalanche, GMX has them beat because GMX was paying a little bit more. But we have to remember that here you're getting paid in DAI, and this 24% APY is with a pair, is GNS and DAI. Here it is not a single asset staking, it is an LP. So this statistically means that the GNS pool is paying way less than the GLP pool by itself. Now, if you are providing liquidity for GNS and DAI, you are getting almost the same than GNX. So now that we've seen these 2 tokens, the GLP and the GNS token, let's take a look at the platforms themselves, the statistics of the protocols itself. How much is the generating? How much is the size compared one to another? How much is the P&L across protocols to see which one is better? Now, if we look right here, this is the Gmx Statistics. We have the P&L since June, so the 22nd of June. Since the 22nd of June, the cumulative P&L of traders has been of negative $3.9 million, meaning that all the traders combined lost $3.9 million. This is since the 6th, so since June. Now, if we compare this to the G-Trade, we can see that since October 2021, so almost 1 year, around 10 months from today, cumulative, they have lost $3 million. So GMX in 2 months lost 4 million, and Gains Network in 10 months lost 3 million. Doesn't mean they are better traders. It means that there's way less money in Gains Network than that is on GMX. Now, if we want to talk size, what is the size of GMX compared to the size of Gains Network? Well, we can show that to you right now. Now, the TVL for Gains Network is around $12.5 million by August 21st. Now, let's compare that to GMX. By August 21st, the TVL is $331 million. So you can see how much bigger GMX is compared to Gains Network. And this is not the only thing that is bigger. If we scroll down to the revenue, comparing revenues between protocols, you can see right here, the light green one is GMX and the dark blue right here is Gains Network. So we may notice how much difference we have between Gains Network and GMX in revenue. This is revenue. So now you see the difference in size of GMX and Gains Network. That being said, which one would you prefer? Would you prefer the one that has way more room to grow, which is Gains Network, or the one who is already consolidating and is making a ton of revenue, daily revenue from the fees? Well, there's 2 things that you need to take in consideration. The first one is, which blockchain do you like the most? This is a very, very important thing because, for example, I am not a big fan of Arbitrum. I'm more of an optimistic guy, but I do enjoy ETH. And with GMX, I am getting paid in Ethereum, which is very, very good. On the other side, with Gains Network, you are getting paid in DAI, and DAI is a stablecoin. So you don't have volatility on your revenue. So the revenue that you have is going to be that. Your revenue is going to be in DAI. So DAI, unless it depegs and goes down to 0, the amount of DAI that you farm is going to stay the same. On Ethereum, if it goes up or down, you might have more or less if converted to fiat currency. These things need to be taken in consideration. Now, I personally, in the beginning, would stick with GMX just because of that Ethereum farming opportunity that I have. But whenever my capital starts to grow, I will for sure invest in Gains Network as well. One does not limit the other. And when you compare, you see that this is actually apples to oranges. They are similar, but they don't share same attributes that make one be better than the other. You can make money using both of these protocols. So it is up to you to choose which one or which part of your financial career you are right now. Where would your money grow the most? And for me, since I'm more bullish on Ethereum and with DAI is just going to stay the same price, I think whatever I farm in Ethereum today is going to grow in value in the future. Again, that doesn't mean that I'm telling you that the Gains network sucks. I would also farm over there as well. Let's say if I had $100,000, I would put 50-50. But since my capital is so limited, I don't have that much money to dilute that money into different farms. I would stick to one. And if this applies to you, if you don't have that much money for you to be able to diversify that much, I would stick just one over another. And this is up to you to see which one you think it is better for you. Now, this is the first pair that we covered on the Real Yield series. We are going to be covering 2 more in the next episode. So make sure to comment down below which ones do you like to see next. And since you've commented already, just take another second to like, subscribe, and turn on the notifications on this channel so YouTube can recommend you whenever I post the next video. But before we leave, one more question. I want to know which one would you choose between GMX and Gains Network? Now, I do enjoy both of these protocols, so this is in any shape or form a way for me to discredit any of these 2 protocols. I enjoy both of them. So that being said, I appreciate your time, appreciate you watching all the way to the end of the video. So if you're one of the few, thank you so much. I appreciate you. And other than that, I'll catch you guys in the next video. Peace.